afternoon, ladies and gentlemen. Welcome back to another FOMC day. I hope you guys are excited. We're finally at the end of like a crazy 2.5 week period of just insane market volatility, pricing in who was going to win the election, the biggest earnings week of the cycle, GDP, NFP, PCE, the election results, FOMC today. We are finally back to almost normal and potentially going to have a really, really, really fun end to the year. So I hope you guys are ready. The interest rate decision comes out at 2 o'clock, along with the prepared statement. And then we're gonna get the kind of verbal statement from Jerome Powell at 2:30, and then we're gonna get that Q&A session over here. So it's gonna get interesting. There's a lot of different things that we could talk about with this. Like we might see a little bit of change of tone with Powell with the new administration that is going to be coming in January, but after today, guys, and after the volatility that we see, oh my God, there are going to be some absolutely insane setups forming. I hope you guys are ready. Those of you guys in the Discord, I mean, you guys know the deal. For those of you guys that aren't yet, I mean, this is the last month to get 50% off your first month. It's literally only $1 a day. But we'll talk about that a little bit later. And again, team, since this is a public stream for Powell, again, make sure you guys are hitting that like button on the way in. Costs you nothing to do it. Helps me out a whole lot, spreading these streams out to some more people here. Let's see what we get today. I mean, market's up a lot. We are seeing this post-election money flow back into the market here. So let's see. Yields are starting to come back down. I believe the dollar is getting whacked a little bit. We had some pretty interesting post-earnings moves this morning as well. The one that I went for, Lyft, didn't end up playing out, but those other two, UAA and ELF, I know a lot of you guys were in there on those. Great work on those, ladies and gentlemen. And then, guys, what was it? Kimberly was hitting Palantir this week for 700%. I nailed it for about 520%. That post-earning strategy is lethal, man. So I think I'm going to put another video out there if I can today about it. Just so that, like, YouTube video, just so that you guys have it. It's lit. Like, I cannot believe more people don't trade like this and they just want to go out there and lose money. It's fine. You guys want to do that, but you literally could just not trade for the rest of the year. Just trade the post earnings, and crush it. I mean, we've only had one this cycle that hasn't played out, and the other ones, meaning that they have played out, are over 100% gains, and most of them run 200, 500, 1,000. In last cycle, Oracle 6,000%. So let's see what we get here, ladies and gentlemen. Welcome back. Hope you guys are having a good afternoon. Let's see. We got Tejas, Daily Taylor, Eddie, Big Don, Moto, Retro, James. What's up, guys? How we doing? The expectations of 25 basis point cut. Yeah. Yeah. Surprised you're still a moderator? Why not, Moto? Why not, buddy? Let's see. So, yeah. And then tomorrow morning, we have public live day. So you guys will be able to come back for that, see what we do every single day. Yields are starting to move down, which is interesting. I mean, this could be a blow. We talked about this. You guys in the Discord saw when David was in there, kind of speaking his thoughts about yields and everything. What we've seen in kind of past post-election results and where we could go in the future there. I think there's a decent argument to be made that yields might start turning around. So, but we'll see. We will see. You hit health, but cut it. Not wanting to hold through SOMC. Got 150%. You're in Z. Z was an interesting one. The chain was really bad. Take 2 at 30. Nice. Let's see. By the way, FedEx and Netflix were amazing, but you didn't enter. Oh yeah, those from the videos that I put out on the weekends for you guys. Yeah, I mean that's what we do every single week. We have the Sunday swings videos. I give you guys a couple of setups every single week to go look out for. Those of you guys are still banging your head against the wall trying to day trade every single day and just losing your money just constantly. I know for a fact all of you guys would start having a lot more success if you just started focusing on swings. But again, less trades, more profits, ladies and gentlemen. So, I mean, that Palantir trade was disgusting. This line here is where our entry was. These 2 days were just phenomenal. I still have those cash secured puts on Hood that I sold down in here. So those are going to give me 100% gains on that. And we'll see. Also, China's starting to heat back up over here. So you guys know I really crushed that China trade on this move last time. I was thinking about buying more, but I don't think I am. I think I'm just going to leave the free position that I still have there. Just ride that thing. See how it goes. At what point do you short Reddit? I mean, you could use the parabolic short setup that I teach you, but you don't do it here. This is not a short here on Reddit. I don't mess with options in day trading. Options, absolutely. It's just if you think about it like this, like there is no actual statistical repeated like mathematical edge over time in day trading. There just isn't. Because if there was, it would just get immediately cycled out of the market. But with swings, you can use information to your advantage, and that is the best edge in the market. I trade options all the time. I day trade sometimes. It's fun. Like I trade futures. You guys see the futures trading strategies that I have, but your main focus in the you will make the most money in the market, like 95% of your gains from the year will come from swings and not day trades. Let's say. Collective risk. What's up, buddy? How you doing? So, what else? Bitcoin gold. Bitcoin's gonna go to 100K within Q1, Q2 of next year, I think. Solana's gonna rip. You guys follow me on Twitter. I posted that yesterday. That Solana chart on the monthly looks disgusting. Like really good. Yeah, also, this is the other thing too about the China stocks here. I mean, you guys have been we've been talking about it like a decent amount in the Discord. Like the sequel is never as good as the first movie. Like I was just looking through the premiums on the option chain on some of the China stocks today. They make no sense. Like I'm just going to keep holding my yin position just to have exposure to China, but other than that, like seriously, do not put yourself in a bad position by buying premiums on China stocks that just don't make sense. Let's see. Every earning season instead of repaying it every quarter. I could do that. I could throw the new when I make the video today, I'll probably throw it in Swing Kings too. For in that tab in the Discord for you guys. But no, you wouldn't short Reddit now. Wait, do you analyze news and potential catalysts for the swings you want to take? Yeah, dude. For some of them, I mean, some of them are just chart setups in leading sectors, but some of them aren't. Like some of them, I look at like China. Think about it like this: nobody else on the internet's really going to give you the analysis to say, okay, well, the Chinese economy is not doing very well. The odds of stimulus is really high, but they have this meeting the next day, and all the China stocks are setting up, and then we go make 900% in 2 days. Like that's not happening anywhere else. Did I enter Billy? No, I didn't. I wanted it. I think I talked about this in the video, but I was talking about that as a shares trade post election, and then it just gapped and came back down. No, I never got that one. The Palantir though this week was that was the highlight of the week so far. That 500% on Palantir was disgusting. So I thought Lyft was going to do it today, but tomorrow we have a few. I'll probably save it for you guys in the Discord. The one, but you guys already know the deal. Like it's not that hard. I don't know why people make trading so hard. What do we have tonight for earnings? DraftKings. Wait, I thought Rivian already reported. Hold on. Am I being stupid here? I might be. I might be being stupid. I might be after hours today. Yeah. Oh, Rivian is after hours today. All right. So yeah, after earnings, I think this is going to be a really interesting setup over the next couple of months. We've been talking about this for a basin break, but we need to get through earnings first in order to see what's going to happen with that one. What about option traders? Like, let's see. They make so much on options. You might think they do. The exceptions don't disprove the rule. Just because they can do it doesn't mean you can. Like that's the thing. Like the only one out of like those I would say is like for sure legit would be Umar. But even then, it's like, all right, like it's just using order flow and stuff, which my volatility zones are pretty similar to that, the way that I day trade when I do it. But again, this is how you have to think of trading. Just because somebody else can do it doesn't mean that you can too. With swings and the way that we enter them and manage them and the way that I teach it and just the way the market moves, anybody can do it. But you can't say the same thing about day trading because when like I think about the emotional side of trading is like the most useless piece of like what people talk about because like there is no why like why are you getting emotional? The only reason why you do is because everybody's just trying to scalp these really short time frames and it jacks up your adrenaline all the time. When we swing, especially with shares too, it's like okay, I enter the trade, the stop's there, the TPs are set, I'm done, I walk away. It's easy. Let's see. Hunting small caps for swing setups now that Trump is president? Maybe. The small cap rallies typically don't last long. If yields start coming down, sure. Like there are some things in the small cap space that make sense, but like other than that, no. Also, Cutthroat, one of those guys owns a prop firm too. Like, you guys got to realize these people are stealing from you. Like, if you're a trader teaching trading and you also own a prop firm, you're in that you're literally there's two things. You're either admitting that you don't know how to trade, or you have every incentive for everybody in your group to fail because you'll make more money in the prop firm. I just like anybody that is teaching trading that owns a prop firm, just run. John, I haven't been over there in like a year. More than a year and a half now. But yeah, guys, as you guys are filtering in here, make sure you guys are hitting that like button. Costs you nothing to do it. Helps me out a whole lot spreading these streams out. Making sure you guys that like have the tools for actual long-term success in the market. Actually, you know what I want to look at? SoFi. Dude, this has been one of the best shares trades that I've given out this year. Well, Yin was probably the best one. Palantir might be they're all pretty close. Like we bought SoFi on this day here in the 640s, 650s. The thing's at 12 right now. That thing's amazing. That thing's looking great. Why can't most people succeed if they put their mind to it and not give up? Most people can. That's not true with trading. That's just not true, especially day trading. Because the type of person that can do it is it's just two completely different things. Like swing trading is more akin to long-term investing, and you can't then expect like these really small candles to just give you any sort of informational edge. Like a bigger candle, like a daily candle, has way more information in it than a 5, 1, 2 minute. And I swear to God, if I see any other videos on the internet of people trading the 15-second time frame, I'm gonna jump out a window. Like it just doesn't make any sense. So, like if you want to succeed, everybody knows what they should and should not do in the market to have success. And you just have to stick with those actions and not all the other nonsense that people are talking about. That's just as simple as that. Am I going to have the Powell video? Yeah, we'll be playing it. We'll have the audio up because we're going to be looking at charts. We're not like, we don't need to look at Powell. We've all seen Powell before. We don't have to stare at him. But let's see. And we're finally towards the end of this 2-week period too. I'm so excited for that. There's going to be so many epic setups. Like there are certain times in the year, guys, where you're going to make like 80% of your gains for the whole year. And this is looking like it's about to be one of those setups. Like you guys remember, I think it was end of September, beginning of October, when we had like 500% NVIDIA, when everything just fires. No, wait, oh, Daniel, that's funny. And it looks like we could be setting up for another one of those periods into the end of the year. So those of you guys that are in there with us are really, really, really gonna see some good gains. Icy, what's up? How you doing? All you need to know is the color of his tie. That's true. How's everyone doing? Good. We've just been focusing on the post earnings really this week. And then we'll see this week and next week. The Sunday swings video for next week is going to be really interesting because there's going to be, especially after we get through like towards the end of the day today and we start to see how these daily candles and setups look. We're going to have a lot better of a picture of where the market wants to go. I mean, we could pull back a little bit, but that's going to be really good for some of these setups here. Reaper, no, you don't want to be doing that. You've seen how that goes for people in the past. Close the door. The close the door thing was hilarious. That was so funny. Yeah, that's kind of all we look. Oh, the DJT puts too. That was an amazing idea. Where's that app? Oh, there it is. There it is. Yeah, I know a lot of I was talking a lot about this. I'll show you guys the trade setup that I gave the Discord on DJT. It was right here. This was where you wanted to long it up to here. I mean, this thing ran like absolute this was actually probably one of the best trades I handed out for the entire year. But then everybody and their mother was trying to buy this thing and all the options on it right leading up into the election. And that really made no sense because the implied volatility was juiced. Yes, it did get a gap up on the election. But again, the play was to short it because if you think about DJT and what it was over the last 2 months versus what it is now, it was a sentiment metric before, which is fine. We got that amazing buy the rumor move to the upside on this thing. But then after the election now, you have to treat it like a normal social media company. And the thesis there doesn't stick. It has $1 million of revenue in the third quarter, and the thing has a market cap of $6 billion. That's an easy short. That's an easy short. What else do we have here? Japan is interesting right now. USD JPY settling in is interesting. We can pull up that chart at some point. You know a guy who full ported DJT? I hope it was when, if you did it, I hope it was when I gave it to you guys down in here. I mean, I saw some of you guys like making like tens of thousands of dollars on that move, and it was awesome to see. So that's how it works, man. That is how it works. That's why we have the best community in the game. Yields are still coming down. TLT is probably having a day today. What else? Market just kind of bouncing around. We got like 15 minutes to go until Powell. Any questions you guys have? Let me know. Nope. Oh boy, that's not good. that's disappointing. Yeah. It's like I was tweeting it out too. ES cracked 6,000. Didn't he full ported before the election? Well, there was an opportunity to like flip it that day because I think it was up 20% in the pre-market or going into market open yesterday. But yeah, other than that, it's just people are going to be stupid, guys. Like, it's just simple as that. And that's why it's like a lot of the time, if you just focus on things like that and are like, well, everybody's doing this way. Think about the bond call that I had on the bond short the day before the last FOMC meeting. It also happens to be the day before Stanley Druckenmiller put that short on. It was right here, this day, Tuesday, September 17th, which is the top in bonds, bottom in yields. So if everybody's going to pile in and think one thing, usually that's the time to start going the other way in the market. Because at this point right here in the bond market, everybody was pricing in an ungodly amount of cuts. The only way the bond market was going to continue to go up from there is that if they priced in even more cuts, which didn't make any sense. So you got the cut and then everybody kind of sold the news on it. And then you started to see everybody get a little bit worried about deficits blowing out going into whoever was going to win the presidency. So now we're here. Full porting before the elections is just an insane thing to do. Like, think about what we've been doing, guys. Nothing. Like, we've just been playing the post earnings, nailing them, and then have some idea trades in there, like the Robinhood cash secured puts, which I know some of you guys bought calls when I did that, and those have been just phenomenal. So congrats, guys. I mean, and then again, this is the last month for those of you guys that want to hop in to really change your participation in the market for the better. To get 50% off your first month to the Discord there, use code BULLISH. It literally comes out to $1 a day. Very soon after that, prices are going to be going up and we go waitlist only. So don't miss that. If you're sitting on the sidelines and you want to hop in and be able to take advantage of these trades, don't wait because you won't be able to hop in and the monthly fee is going to be a lot higher coming in the near future. So just wanted to mention that to you guys there. But yeah, these HUD puts, I mean, I'm going to be able to make 100% on this. What else? Here's something else that I'm interested in here. RKT. I'm really interested in this here. Now, nothing yet, but in terms of like to actually buy this thing and from a trading perspective, if we can shift above this 10 EMA on the daily here and start consolidating, like, oh my God, this thing could be an absolute, I mean, good term here, rocket ship. We've done it a few times on this. This was an unbelievable one back in here. So I think there's some potential for this thing to do it again. He literally called it calculated risk because he said the sentiment around the streets was that everyone was voting Trump. Yeah, that's why, guys. That's why we bought it when that was part of the reason why we bought it when we did. Like, but again, when a average retail investor, 99% of the time when they look at something and they say, "Oh, it's guaranteed to happen," it's actually the other way. The opposite is guaranteed to happen. KRE coming back to reality. See, that makes sense. But the thing is here is that if yields start to move down, that short is not actually going to make sense in the regional banking system. So I'm leaving that be for now. I don't think I'm going to touch that. Elf discovered it's afraid of heights. I think a lot of you guys were able to make that free. What's the price? $59 a month, but if you get the 50% off, it's $1 a day for your first month. But there's a reason over there, guys. If you click on that link that I put in the live chat and look at the reviews, there's a reason why I only have 5-star reviews. It's simple as that. Kimberly, how you doing? How you doing? All right, so we got about 10 minutes here until the interest rate decision. I would expect us to see a 25 basis point cut. And then some kind of cautious statements from the Federal Reserve, because if they did the 50 in September and then nothing at this meeting, that is going to be a really bad signal to the market about the economy, because it's going to show, and it's basically an admission that the 50 basis point cut in September would have been a mistake. And this Fed right now is really, really dependent on their credibility because of all of the forward guidance that they continuously issue. They think that if they start walking back things when they may not actually be correct, it's an admission of them not knowing what they're doing, versus what it actually is reacting to the data in the present, which is what they should do. You really shouldn't see all of this guidance that the Fed members actually give. I'm with Druck on that one, but we'll see. We'll see what happens. That's kind of my expectation. 25 basis points cuts, cautious comments. The market's going to whip around a little bit, but if I were to pick anything for this FOMC meeting, I would expect it to be a dud. Market not really changing. Well, I would say it'll be a dud or it dies. That's kind of what I'm thinking. I think it'd be really hard for the market to really rip from here. I've got a little thesis too about the job market, rate cuts with the new deportation stuff coming up from the Trump administration. I do have a thesis for it. I got to put it together a little bit more, and I'll tweet it out at some point, but it's interesting. It's a very interesting thesis. Wait, Putin quotes coming in? Yields falling. Putin says, don't think it's wrong to hold a call with Trump. We're ready to speak with Trump. Congratulates him. You're impressed with Trump's behavior during the assassination attempt. Calls him brave. All right. Russia, Europe have to return to mutual trust. Well, it's going to be hard when we try to put, never mind. Rate cuts should keep Bitcoin run going. The Bitcoin run is not necessarily dependent on rates. That's what people don't realize. It's not dependent on rates. It is, but it isn't. What you really have to think about is if bond yields are to remain higher, even with the Fed cutting rates, what does that lead to? Well, it leads to more treasury issuance, which is going to lead to a situation in the probably near future, if they remain high, obviously, where the Federal Reserve is going to have to come out and buy our bonds. How are they going to do that? Well, they have to print money to do it. So that devalues the currency, pushing things like Bitcoin up. So they can cut rates all they want, but it really has to do with our deficit right now, and not necessarily if the Fed just cuts rates. Because think about it. If you're going to use rates as a risk on metric, we've been in high rates all year and the market has skyrocketed. So Bitcoin's up this year. It's like, okay, well, maybe you get a little bit of a boost with more cuts, but I think this move in Bitcoin is going to last. I mean, obviously you're going to see some volatility, but I do not think that it's just going to die from here. I think it's going to continue to move to the upside significantly. That is my view. You think eBay has a chance looking good in the coming weeks? Let me take a look. I haven't seen this pop. Yeah. Yeah, eBay has that look. So that's actually a good call there, Don. I like that. I like how this looks here. So I'll keep this on the radar. I'll just throw an alert here just to have it if I forget. But yeah, I do like how eBay looks here. That could be a really fun one. Yeah, yields pushing down a little bit going into the interest rate decision. So was that no? Wait, what? Hold on. What happened to Rivian just now? Why did I just hit it? Oh, it fell below 10. That's why I want. I like that, actually. I'm interested in Rivian at these levels here. I don't know if I'd buy it pre-earnings, but I see a lot of those cars everywhere. Check out Solana. Is it still going? I did make that call on Twitter. Yeah, dude. I mean, I made that call on Twitter yesterday. Solana up 5% the day after. That's good. This is what it looks like here on the monthly. It looks identical to what I gave you guys on the Bitcoin chart like 3 months ago. So this is looking really, 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 really bullish, just to put it that way. I mean, if you take out this high, you're going to 400, 500 on Solana. You're going to make some moves, I think. But yeah, guys, make sure you guys are hitting that like button on the way in. We're about 15 likes away from 50. I appreciate it. Thank you, guys. Take two popped up a little. Did it? Oh, there it goes. Dude, these option chains have just been insane. Like, we have so many. Like, remember this morning on the private stream when we were going in and saying, all right, well, we have like 14 potential post-earning setups, and then some of them would validate, and we'd look at the chain, and there's like 200% spreads. And it's like, all right, guys, we can't do anything with that. Unless you really size it for zero and say, well, hopefully the spreads tighten and the bid ask just starts rocketing with it. But that's not really a risk that I need to be taking. There's no point. So let's see what happens with the market here. We've got 5 minutes to go, ladies and gentlemen. Five minutes until the rate decision. It'll be fun. And then, yeah, once Powell comes on, we'll get that audio up there. We'll start listening to him and see what he has to say. There's also, he's going to get a question about, oh, what do you think about, he's going to get a lot of questions today about the new administration. And basically his response is going to be like, I congratulate Donald Trump on his victory and with nothing else. Like, I don't even know why the reporters are going to ask him stuff like that. I mean, they might, if they start asking specifics, like in terms of policy, sure. But at this point, you don't really know. You don't really know what they're actually going to be able to do and how it's going to affect the overall markets. So it's basically like he's going to give like a wait and see type of response there. Try gold. What do you mean about try gold? Gold's down. I think gold's going to have some buying opportunities coming up pretty soon. Afternoon SCV. What's up, Christopher? How you doing, buddy? I bet he doesn't say data dependent. You think because they're going to... I think he does. I mean, they always... That's a pretty lofty bet. I mean, if we were taking that bet, I would give you like 1 to 3 odds on that thing. Just to be fair. I mean, he's almost always going to say the Fed's data dependent. Yields are pushing lower pretty aggressively here. That's interesting. That is very interesting, team. So I really do actually like how this eBay setup is forming here. So we'll keep an eye on that. We'll keep an eye on that. Shots every time he does? No. I'm taking a little break from the drinking. Little hiatus. Hollow weekend was rough. Nancy's 20th term. Yeah, I mean, that's a bit. She's going to be back? I didn't even see that. That's crazy. I didn't even know she was up for re-election. Someone says data dependent. How about we don't and say we did? How about that? If Powell address was at 5 p.m. Yeah, but that would be like 6 for me. Tor, what's up, buddy? How you doing? Well, I like RKT is going to probably be something that we look for. Rivian, eBay actually is. This is one that we've had like an insane amount of success with in the past eBay. So again, guys, and here's kind of the overall. Oh, hold on. Never mind. We got a minute to go until the rate decision, everybody. Here we go, ladies and gentlemen. Make sure you guys are hitting that like button on the way in. We are going to be having some fun this afternoon. And remember, we're going to be live tomorrow morning for Market Open too. So, yeah, Friday is the public live day for those of you guys that aren't in the Discord. And then, yeah, every other day live privately for you guys in there. You guys get all the courses, all the watch lists, all the pre-market plans, the macro research reports, single stock research reports. There is like an insane amount of value in there. I honestly shouldn't be giving everybody their first month for $1, but you guys know I like to give you guys like the sickest deals in the world for like the best trading education. So you guys that got the courses early got the best deal in the world. You think SPY will drop to 589 by end of the day? That's a massive drop from where it's currently trading. It's a massive drop. So, all right, 5 seconds. Here we go. Here we go, ladies and gentlemen. And Fed cuts rates by 25 basis points as expected. The decision was unanimous this time. Ooh, no dissent. That's interesting. No dissent. So remember, my expectation was 25 basis points and kind of a dud. If anything, the market would tank. But I do think that this FOMC meeting is going to be a dud here where we don't see it really fly all over the place. But it is interesting that that vote was unanimous. Last time on the 50 basis point decision, we did see a dissent, meaning that there was somebody on the board, I think it was Bowman, that said that they did not think that the proper policy decision was to cut by 50 basis points, and it was to either hold off or cut by only 25 based on her view of the overall macroeconomic data that we were seeing. So right now, yep, we are seeing a dud. To me, this is really good so far. I want to see this be a dud, mainly for all of these just like amazing 1000% setups that we have forming. So yeah, dud. So just as expected here so far. Things could obviously move around a little bit once Powell starts speaking, but I really would not expect this to go that crazy. You came in right at expectations. There's no dissent. We're not getting a new SEP this time, summary of economic projections. So, and quite honestly, at this point, the SEP is kind of invalid. So it's really only like what's still now kind of it's still valid, but as you get into December and we get another round of data, you can't really look at the old SEP anymore from September. Lulu. We were looking at Lulu this morning on the break, but the options were so horrendous that we just didn't go for it. So, and it was like leading into Powell, so that was weighing into it as well. So we didn't touch that one. That's why the private streams that we do in the Discord are so important because like, yeah, I'll like highlight something, but like when it comes down to like the game time decision about whether or not I'm taking it, like things change. So sometimes we won't take stuff, sometimes we will. Sometimes, and this happens sometimes, where like everything on the watch list just goes absolutely nuts. TLT's not liking it. Yields are up on that. Nah, I mean, that's not really a significant move. If yields start really move, that's the same thing too. Like if the market's going to like dud of a move and not really move around, yields are going to do the same thing. So you look at yields here, you throw this on like the 15-minute, they're coming up a little bit off of that. But I would not deem that as being significant. If we start to move back up to like 4.4 today, I would start to consider maybe scaling into a TLT long position, like a little longer dated, maybe even TMF shares. But other than that, I'm not really looking at any new bond ideas. You guys saw the bond idea that I had. It ended up being incorrect. That was the first bond market idea of the year that was not correct. So it happens. I mean, I'm not going to nail it every single time. I would take that trade again. That TLT idea. No reference of moving towards 2%. Ooh, that's interesting. The one thing that I really okay, so let's now think about what we need to see out of Powell at this meeting here, and what he could potentially say. So the most important piece of data or really opinion coming out of the Fed is where they think the neutral rate is. So right now, policy is from the Fed, even though it's not, but from the Fed, it's still deemed to be restrictive. Now you have restrictive, you have neutral, and you have, let's say, accommodative or expansionary or whatever you want to call it. We do not know where that neutral rate is going to land right now. We just have expectations. Over the last month and a half, 2 months actually, we have seen the expectations for the neutral rate climb, which is one of the reasons why you've seen bond yields skyrocket the way that they have and bonds absolutely tank. So if we get some more guidance and some opinion out of the Fed today on what that neutral rate is looking like it's going to be, that is going to be a lot of what the market's going to be kind of holding on to over the next couple of weeks here as we get into the end of the year. No change in bond buying volume. The Fed's still running off. They're not buying right now, bro. They're still selling. But yeah, how's eBay? Because I actually really like this setup here, like a lot. You get 2 more days, 1 or 2 more days of consolidation on that thing. Oh my god, I would love that. Where are my China stocks? How are we looking after FOMC over here? That's still looking really good. I love the I sold here thing on yin. So we were buying yin back down in here. I wrote it up, wrote it all the way back down, and then just this thing went nuclear up here, which was awesome. So this was the day that I was selling about half of it over there. It was up from entry. I think I have it in like the 20s right in here. So this was up 150 something percent. So I have like very, very, very free yin shares over here for my long exposure to China. I'm gonna hold that. Gonna see what that's gonna do. Lyft is back there. Yeah, Lyft's not going to do it. That's the first one from this earnings season that did not end up playing out. Every other one of them, which I believe there were about seven, there might be seven total. Six hit for at least 100%. We had the Palantirs running up well over 500%. If you continue to hold, they went up 700%. I know the Tesla ones for you guys, I believe, were about 300%. We had TSM, Philip Morris, and a couple of other ones in there too. Now, I think I'm going to be able to get that earnings video, the earnings strategy video out for you guys tonight. I'm going to try. So make sure you guys have notifications turned on for the channel so you guys don't miss that one. No change. IWM low of day. Really? I mean, it was not looking good, but yeah, it's still up there though. I mean, that's kind of why I wasn't really looking to do anything going into Powell here, because my overall assumption is that this is a dud meeting and we really don't get anything new. That's kind of what I'm looking at here. They're still doing QT. Yeah. Yeah. So they're going to sell off. If they start buying, oh my God, that's like buy gold, Bitcoin, silver, every platinum, buy every single precious metal that you can. If you ever see the Fed say that they're going to announce bond purchases, oh dear Lord, where are they going to get the money from? They have to print it. Your Tesla, if you held, ran up to 900%. Yeah, guys. I mean, these trades that I'm handing out are nasty. So I'll throw that link in here for you guys again, just for those of you guys that that are like really serious about taking your participation in the market seriously. Yeah, use code bullish. You get your first month for $1 a day. It's like, that's the most insane thing ever. You get both the courses, all the watch lists, all the pre-market plans, the volatility zones, the macro research reports, the single stock research reports. What else is there? There's a lot in there. There's a lot in there for you guys. And then also, even if you just want to check it out, click that link, go read the reviews. There's a reason why I only have 5-star reviews. Oh, also, there's like no upselling going on. Like, it's just, that's what it is. There's no like, oh, also, if you struggle, oh, do this because it's going to come and help you. No, none of that. We're here to trade and make money, not to make money off of you guys. You want to come in? Great. If not, hopefully you have all the success in the world, but you probably will have more success with the swings. Yields peaked a little bit there. How does ZB look? Because ZB could actually like, yeah, oh, that's a 15-minute. Whoops. I was gonna say, if that's the daily, oh, I'd be really thrilled. I might give this a little time. It's tough to get like actual clean breakout setups on like the bonds and some of these inverse ETFs sometimes, but I mean, you might be able to get one. He blackmails us with ankles. It's the ankles. Dude, come on, man. We should have a separate review section where you guys review my ankles. I hate it for all the new people in here. They're going to be like, what's wrong with you? Oil exposure. I probably would not want to be long oil going into a Trump administration if we are going to, resolve the conflict in the Middle East. Oil is probably going to trend down. And then, Then if you also have Trump coming in and starts drilling and really adding to the SPR and using American oil, then absolute oil is going to come down. So oil would not be something that I would want to be long going into this next administration. Ankles, you guys are weird, man. You guys are so weird. So Michael put something really awesome into the Discord today. I threw that on the Instagram story to all the new people in here. Short the VIX is the real deal. Oh, thank you, buddy. Watch the curriculum videos multiple times. We are outperforming the major indexes by a lot. This is my portfolio results starting from when the Discord opened. Best of luck to all. And he is up 21.78%. How long have we had the Discord open for? A month and a half? Not even. Wolf new highs? Yeah, Wolf was an interesting one. Take two. There we go. What's the market doing here? Nothing. It's a dud. What do we have for data coming in tomorrow? Because we do have a little bit of time here, about 20 minutes until Jerome Powell actually comes on. I know why. I don't have it up here, but let me see what the data calendar looks like. Let's see what we have for tomorrow. The free car. All right, hold on. Let me see here. Come on. Consumer sentiment at 10 a.m. might be interesting. And then Bowman is going to be speaking about banking regulations. We have two Fed speakers tomorrow, but I don't really think they're going to say much. But consumer sentiment could actually be very interesting. Not this one, but the next consumer sentiment report, I would assume, is going to show that consumers are confident about the future. What's going to be interesting to see is what consumers' inflation expectations are like. We've talked about that a lot in the past, where if inflation expectations go up, think about it like this. So a lot of people in here are going to be getting some free sauce here. If inflation expectations go up and you are a rational thinking human being with a job, what do you then ask your employer for? If you think prices of goods and services are going to be higher in the near future, well, obviously you ask for higher wages. So you're asking for job increases or wage increases, a raise. Um, Well, when that happens, the employer has two options. One, they can fire a portion of people because it's not just going to be you doing it, or they can pay those wages and then have to increase prices. So it's a self-fulfilling prophecy with inflation expectations. They circle each other around. So if those can stay in check, that's good. It depends on what the overall expectations are going to be in a Trump administration with the tariffs. Now, personally, I think the tariffs are really just going to be a bargaining chip. They're not going to just slap blanket tariffs on everything and increase prices. That would be insane, irrational, and illogical. If that does happen, obviously, we're going to be looking at assets that are going to benefit from inflation because it is inevitable. It kind of already is inevitable right now. This is actually an interesting point. It's like if people actually wanted the economy to get better, and I think this is a point that a lot of people miss. Um, if you actually want the economy to get better, prices to go down, you have to witness serious pain in the markets in general, like food, everything in the economy first. You have to go into deflation, not disinflation, what we're seeing. So if you can slow down the pace of increases in wage growth can outpace price increases, then that's fine. But that's a very tough needle to thread. Very, very tough needle to thread. So we'll see. I mean, it's not really going to change anything that we're doing. That's my thought to be eases food more oil to go around. Yeah. Yeah, it's going to be interesting. I mean, we'll see. It's not like everything's going to change in an instant. It'll be slow changes that start to happen, but obviously we are going to be able to identify where capital is going to flow based on those changes. So that's what I'm here for, helping you guys out, making sure that you guys have everything you need for long-term success. All right, eBay, I love this chart. Discord people, you know what we're looking at here. This is potentially setting up to be a monster move, very similar to what we saw back in here on eBay. So we're going to be looking at that. The Solana move I called out yesterday was really good. That's moving to the upside, but that's really based on the monthly chart. I think this is going to see the highs in the next quarter. So we'll see. Let's see what TMF is doing. Nothing crazy. So, yep, complete dud out of the FOMC so far, which makes sense. That was kind of our expectation that we outlined going into today. Yeah, it'll get interesting. So, and then yeah, make sure you guys are following me on Twitter too. I do post a lot. I mean, not a lot, I don't think, but and it's a new Twitter account. So those of you guys that think that you're following me on Twitter, you probably aren't. So that's the link to the new Twitter account there. Short the VIX 2. So, but I am interested to see what Powell's going to say today. I don't expect it's going to be anything crazy. I think they're going to ask him a lot of questions about the new administration, the tariffs, and he's just basically going to say that's not my job. So But they will ask him about what he thinks about the comment that was made today about Trump allowing Powell to continue to have his job. Let's see. Sanjay says, "Thanks, Jack. Guys, sign up. Best thing you do in 2024." Oh, thank you, buddy. I appreciate that. So wish you started this before. Yeah, I mean, hey, it is what it is. We all get here at some point, but yeah, I mean, those of you guys that have been in the Discord too, if you guys want to let other people know what your thoughts have been like with it, the reviews are already on the site there. So if you guys want to take a look at those, by all means. But I mean, I don't say it's the best community in the game for nothing. Nobody's calling out 500 or 1,000% trades like every week or every other week. It's just not happening. So we'll see what we get. Um, there are some interesting trades setting up, like that I would go bigger on. Um, like the trades that we have like more of like a macro or data thesis on, I typically size up into them. Like the like PDD is an example of one. China was good. Let's see. Less trades, more profits is real. There you go, Kimberly. You kind of figure whatever he does won't really kick in for a year or two after James Joint tariffs, tax code, market reform, Elon stuff. Yeah, it'll take time. It'll take time, but the biggest issue facing the country right now is government spending and the efficiency of government spending. Like, think about it like this: if you had, like, I feel like everybody kind of gets the gist of like the government doesn't spend money efficiently. Um, even if let's say it like this, if you were to even take the budget that we have right now and spend the same amount of money, but spend it really efficiently, you'd probably have a lot of better outcomes. Now, obviously, with the tax revenue that we have, the amount of debt that we have, the interest that we have to pay, that number does have to come down. But I mean, if you were to even cut that number by what they're saying, but make like stretch the dollars more and actually help the people that need it, that's exactly what you need. Um, I don't want to talk about. We talked about my theory a little bit this morning about rate cuts, the job market, and one of the Trump policies. I got to look at it a little bit more. I think it holds weight. I think it's a really interesting one that I think is a likely outcome if that's what they do. But we'll see. Plus, Russia gets access to SWIFT as well if conflict is resolved. Yes, they. Well, yeah, they would. It'd be tough though. I think that'd be a tough thing to do just in terms of like reaction to everybody in the public. Be like, oh, we're letting them back in. It's like, well, you probably should, but we'll cross that bridge when we get there. All right, about 13 minutes to go here. Oh, my yin is looking great here. I mean, I posted on the Instagram story. That account's up like almost $4,000 today. It was up a lot yesterday too. Do you think Doge will help government spending? Yes, I 100% think it will. With you, bro. Sanjay, there we go, buddy. Let's do it. Let's do it. Let's make you guys some money. It's not like we haven't been doing it. Rivian reports earnings today. So I thought it reported earnings yesterday or today. So that message I sent you guys earlier, it's like, oh, you still keep an eye on it. Like Rivian's going to be a company that I watch over the next couple of months here because this is setting up for a potential basin break, very similar to the trades that I gave you guys here on Nike. This one right here was amazing. These are some of the best trades. Snow. This one was epic in here. This was one of the best ones. What else? Snow, Nike, and then what else? There was Snow, Nike. Oh, Airbnb was another one. This one right here. Boom. That was filthy as well. So 1,000%ers left and right, ladies and gentlemen. That's what we do. All right, 11 minutes until the speech comes on. Let's see. Oh, you guys are crushing the like button today. Thank you guys. I appreciate it. All right, let's see what else we got. Anything else coming through the feed here? Malay to meet with Trump next week in the U.S. Interesting. U.S. rate futures pricing another. All right, so that's interesting. 67 bips of cuts in 2025. The overarching expectation for rate cuts going into the end of the year before today was 25 today. and then 25 in December. So 50 more cuts. Before the last meeting in September, we were pricing 125 bits of cuts, which means two 50 basis point cuts. Now they're kind of in between on the December one. Why is this being weird? There we go. All right. CELH basing break? Not yet. It's not basing enough for me. Oh yeah, DJT, Palantir. Yeah, those have been disgusting. So yeah, I mean, you guys want to hop into the best community in the game for $1 a day? It's insane. Just use code bullish to make sure you get that 50% off discount. That ends at the end of the month too. So this is the last month for the 50% off your first month, and then very soon after that, the overall prices are going to go up, and we're going to go waitlist only, so you won't be able to hop in just whenever you want. But because I only really want to work with the people who are like serious, that are like, I really want to come and learn this. Like, if you're going to come in and be like, just do that. No, that's no. I'm going to make sure that you guys have the skills that you need to have success for those of you guys that really want it. And it's really not that hard. Remember this time last year, rate cut expectations for 24? Yeah, they were pricing in like, this time last year, they were pricing in nothing, and then it started to switch. That's when TLT bottomed. So this time last year, they were pricing in no cuts, I think, or a really small amount of them. And it was right around, because this was the time of last year when I gave you guys TLT sub 85. So they had to have been pricing in nothing. So it was here is where I gave it to you. But I'll throw this on the daily, and you can see it a little bit better where I made this call right here was where I gave you guys the TLT. Then it ran all the way up to 100. That was nuts. So we've had a lot of really good bond market calls this year or over the last year. So from now until last year. So this one, the short up in here, didn't get this one right, but that's fine. I mean, not going to nail all of them. And then we were calling it all sorts of different spots in here, especially with Yellen. So there's a day in here, it's May, where it's like May 28th or something, where she top ticks it. Or 16th, was it in here? It was somewhere in here where as soon as, or no, maybe it was in here. Yeah, it was right here. Because it was at the end of May when Janet Yellen started to buy bonds when they issued the new quarterly refunding agreement. And then this was the day that they started to buy, and then bonds just went from like what TLT went from like 89 to 93. That's still a big move. Wasn't that when rate cut expectations start accelerating? Yeah, Ralph. It was when they started, and this is that's what I'm saying. Like this was right at the time where I started to say, all right, it's time to long TLT. So, all right, ladies and gentlemen, what we got 8 minutes to go here. Let's do it. I mean, I'm not really going to be taking any trades. This is not like a trading day or a time to be trading if you want to be smart. Those of you guys that want to go gamble, figure it out. Outbroken has a range today with earnings. His earnings disqualified this type of move. He's also played about 121. Now, Wade, Elf was a post earnings move that I highlighted to the Discord this morning. And those of you guys that are in it, you probably were able to get out of this thing, make it free for over 100%. The spreads were bad though, so I didn't take this one, but I know some of you guys did. So, but no, this is not something that you would trade now. This is something that you would use the post earning strategy on, which I will be doing my best to make a video about that tonight to send out to you guys. Not in the, I'll like post it publicly on YouTube. So if you guys don't have notifications turned on for this YouTube channel, make sure you guys do, because you're not going to want to miss this one. Like there's only been one post earnings move this cycle that hasn't worked, and all the other ones have been at least 100%. The biggest one I've seen is 900%. Then we had a 700%er, a 300%er, and then a couple more. And they're literally the easiest trades in the market to take. You cannot make it any easier than this post earning strategy. Like, I know the way that we trade the swings in general is pretty easy, but this is even easier than that. So. But yeah, wait, so we wouldn't be doing anything on it now. If it were to start consolidating, sure. Like the post, we had that. There was one cycle this year where you'd see the big gap. So we would hit the post earnings move, then they'd consolidate and rip again. I think that was Q2 is when we saw a lot of those, and those were phenomenal as well. So like if you start to see the normal setups form, like right like in the 2 weeks following earnings, yeah, they're still valid. A basin break. Yeah, it is a basin break, but it's not. You wouldn't be trading it now. It's like when they gap on earnings like that, it's just a post earnings move. That's all you're looking for there. Let's see. Yes, we got 5 minutes until Powell comes on. That's when things are gonna get interesting. Yeah, that's the link. I have the link, Ralph. Thank you though. It's over here. There's nothing on yet. 5 minutes to go until we hear Papa Powell speak. Which, I mean, I really still think that this is going to be a dud of an FOMC meeting unless he comes out and starts speaking very hawkishly. Kimberly says, for anyone on the fence about joining, the post-earning strategy alone is worth it. But we have the best swing strategy, and the macro reports are fire. Thank you, Kimberly. I appreciate that. Yeah. I mean, you guys see it all the time. At least even just go click the link pinned to the top of the live chat there and read the reviews. The reviews are the way they are for a reason. But I'll throw the link one more time for you guys in here. If you guys want to hop in at some point, just use code bullish. But this is the last month for the 50% off your first month to hop in for $1 a day. So don't miss that. Dude, yin is ripping right now. Oh, I'm making some money on this. There we go. I love that. I love that. I mean, if yin can hit like 75, I'd think about selling it some more then, but it's free. Remember, like I have zero risk and I've already realized a lot of profits on that position trade that we entered earlier this year. So you don't need very many of those a year in order to absolutely nail it. SoFi was another one. We've been long SoFi for a while, and SoFi has just been a killer for us. Which, all right, how many of you guys in the live chat right now bought SoFi on this day when we were doing this on the private stream? I'd love to see. It'd be interesting because I know Michael has it. There's a lot of you guys that do have the SoFi. This is almost another double for us. Philip Morris was the one that we actually did the full single stock research report on, and that thing went up, I think, like 30 something percent plus paid you dividend. And it's a dividend stock. Like, that's insane. That had to do with Zin, though. Jeremy did. Nice. Congrats, man. That's a great move. That's a great position there to have. You bought some Reaper? Nice job, guys. Great work, man. I mean, you guys have been crushing it. You guys have been crushing it. So, we're going to do the thing where we make sure that you guys can hear Powell. We'll sit back. We'll kind of go through it. I'll type in some comments as we get through, and then we'll be done. Josh says the financial knowledge alone is worth the money. It's real world financial education at a fraction of the cost of college. Yeah, thanks, man. I appreciate that. I'm happy that you guys are, what do you call it? Crushing it. Kimberly was on the fence for a while. We convinced her to join, and now she's one of the biggest promoters. I know Kimberly crushes it. Did I buy more yin today? No. I wanted to buy it yesterday, and I was actually thinking of buying more, like re-adding to the position, but I didn't end up doing it. PM was crazy, and the divvies are nice. Yeah, Philip Morris was a really good one. I can show you where we got it. If we pull up PM over here. This was when the research report went out. Here. So it's off the chart, but yeah, this is where the research report went out, right around 95. The thing went to what, 140, 135, still at 124. This is probably, I was thinking this too. We talked about this in here when PM was at 123 when we were on the stream that one day, and I said, if you guys want to take profits on this thing, go for it because you got the divvy, you got to ride it from 95. A Trump presidency with RFK hopping into the like the healthcare space could not be great for companies like Philip Morris. Unless they really start pushing like alternative nicotine usage, which could end up helping those over the long run. So we'll see. But yeah, no, I didn't buy it. Ralph, there you go. SoFi? I don't think you bought SoFi. I think you're lying there. I feel like we talked about this today. All right, 1 minute to go until we start to see Powell here. Here we go, ladies and gentlemen. Oh, you bought yin. Nice. You took a hunk of yin to go along with your existing K-Web. Finally, you're on the yin bandwagon. Here we go. Ralph is going in here to the 3 times levered China. I love it. I love it. Yeah, I think it's going to do very well. I think it'll continue to do well. I think people are overreacting to the potential for Trump to be very tough on China, because even if that does happen, what does China do? They just unleash more bazooka stimulus. So we will see. PM is one of Josh's favorites. Is it? Oh, nice. All right, let's see if we see Powell. All right, hold on. I don't see him yet. He's coming though. All right, guys. Again, make sure you guys are hitting that like button on the way in. Helps out a whole lot, spreading these streams out to some more people here. You guys are crushing it on the like button. Thank you, guys. Thank you, guys. All right, where is he? Where is he? Powell, where are you? Oh, I see him. I see him. Oh, hold on. Ah.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state and remains solid. Inflation has eased substantially from a peak of 7% to 2.1% as of September. We are committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. Today, the FOMC decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by a 0.25 percentage point. We continue to be confident that with an appropriate recalibration of our policy stance, strength in the economy and the labor market can be maintained, with inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.8% in the third quarter, about the same pace as in the second quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has strengthened. In contrast, activity in the housing sector has been weak. Overall, improving supply conditions have supported the strong performance of the U.S. economy over the past year. In the labor market, conditions remain solid. Payroll job gains have slowed from earlier in the year, averaging 104,000 per month over the past 3 months. This figure would have been somewhat higher were it not for the effects of labor strikes and hurricanes on employment in October. Regarding the hurricanes, let me extend our sympathies to all the families, businesses, and communities who have been harmed by these devastating storms. The unemployment rate is notably higher than it was a year ago, but it has edged down over the past 3 months and remains low at 4.1% in October. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly over the past 2 years. Total PCE prices rose 2.1% over the 12 months ending in September, excluding the volatile food and energy categories. Core PCE prices rose 2.7%. Overall, inflation has moved much closer to our 2% longer run goal, but core inflation remains somewhat elevated. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we're attentive to the risks to both sides of our mandate. At today's meeting, the committee decided to lower the target range for the federal funds rate by a 0.25 percentage point to 4.5% to 4.75%. This further recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we move toward a more neutral stance over time. We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing policy restraint too slowly could unduly weaken economic activity and employment. In considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. We are not on any preset course. We will continue to make our decisions meeting by meeting. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains strong and inflation is not sustainably moving toward 2%, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly, or inflation were to fall more quickly than anticipated, we can move more quickly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
Yay.
Thank you. Given the expectation that the election outcome will produce policies that would meaningfully impact the U.S. economy next year, how is the committee taking these proposals into account for upcoming decisions, including potentially the next one in December? And can you give us any more sense of how proactive or reactive the Fed is prepared to be to changes in economic policies with the next administration?
Sure. So let me say that in the near term, the election will have no effects on our policy decisions. As you know, many things affect the economy, and anyone who writes down forecasts in their job will tell you that the economy is quite difficult to forecast looking out past the very near term. Here, we don't know what the timing and substance of any policy changes will be. We therefore don't know what the effects on the economy would be, specifically whether and to what extent those policies would matter for the achievement of our goal variables, maximum employment and price stability. We don't guess, we don't speculate, and we don't assume. Now, just in principle, it's possible that any administration's policies or policies put in place by Congress could have economic effects that over time that would matter for our pursuit of our dual mandate goals. So we, along with countless other factors, forecasts of those economic effects would be included in our models of the economy and would be taken into account through that channel.
Nick.
Chair Powell, Nick Timrose from the Wall Street Journal. Roughly 1 year ago, when the 10-year Treasury was flirting with 5% and 30-year mortgage rates were near 8%, you noted how higher borrowing costs, if they were sustained, could weigh on economic activity. Given that you've said you believe policy is restrictive and the Fed is now dialing back that restriction, are the growth risks presented by higher U.S. Treasury yields today any different from those you identified 1 year ago when inflation was still meaningfully above your target?
So I would just say this: we've watched the run up in bond rates, and it's nowhere near where it was, of course, a year ago. I guess the long run rates are well below that level. So we're watching that. Things have been moving around, and we'll see where they settle. I think it's too early to really say where they settle. Ultimately, I'm sure we've all read these decompositions of what, and I certainly have, but it's not really our job to provide our specific decomposition. I will say, though, that it appears that the moves are not principally about higher inflation expectations. They're really about a sense of more likelihood of stronger growth and perhaps less in the way of downside risks. So that's what they're about. We do take financial conditions into account if they're persistent and if they're material. then we'll certainly take them into account in our policy. But I would say we're not at that stage right now. It's just something that we're watching. And again, these things don't really have mainly to do with Fed policy, but to do with other factors in the economy.
If I could follow up, is the September SEP, are those rate projections still valid? Do they still seem relevant given where we are now?
You know, you get halfway through the cycle between the last set and the next set. I wouldn't want to comment one way or the other. You know, let's talk about the data we've gotten since the last meeting. So in the main, the economic activity data have been stronger than expected. The NIPA revision was stronger. Certainly the September employment report was stronger. The October report, not stronger. Retail sales stronger. So overall, though, I think you take away a sense of some of the downside risks to economic activity having been diminished with the NIPA revisions in particular. And so overall feeling good about economic activity. So I think we would factor that in. At the same time, we got one inflation report, which it wasn't terrible, but it was a little higher than expected. So I think really the question is December, and you know, by December we'll have more data. I guess one more employment report, two more inflation reports, and lots of other data, and you know, we'll make a decision as we get to December.
Gina Smilik from the New York Times. Thanks for taking our questions, Chair Powell. When it comes to December, what will you be looking at specifically as you try to make that decision? And then as of the Fed's economic projections in September, you had written down 4 quarter-point interest rate cuts in 2025. Do you still think that those are likely? Is that sort of the baseline outlook at this point, or has that shifted? And if it shifted at all, can you give a little bit of detail as to why?
You know, we don't fill out an SEP, and I can't characterize one that wasn't filled out today. So I can't really speak for kind of exactly where the committee is. I would just say for December, we're going to be, again, at every meeting, we're going to be looking at the incoming data and how that affects the outlook. As you know, we're in the process of recalibrating from a fairly restrictive level at 5.33%. After today's move, we're down 75 basis points. And we're asking ourselves, is that where we need to be? You know that we're trying to steer between the risk of moving too quickly and perhaps undermining our progress on inflation, or moving too slowly and allowing the labor market to weaken too much. We're trying to be on a middle path where we can maintain the strength in the labor market while also enabling further progress on inflation. We think that's where we are, but that's the question we're going to be asking in September and in other meetings. And again, I can't really update you on the committee's thinking because we don't fill out an SEP at this meeting.
Yeah, totally appreciate that. I guess when it comes to your own thinking, do you think that a full percentage point of rate cuts in 2025 is a reasonable outlook?
Again, we're going to wait and see how things come in December. I mean, it's just, I would put it this way. We're on a path to a more neutral stance. And that's very much what we're on. That has not changed at all since September. You know, we're just going to have to see where the data lead us. We have, you know, a whole 6 weeks of data to look at to make that decision in December. Obviously, I'm not ruling it out or in, but you know, I would say, you know, I would say that, you know, again, we didn't update the SEP, so I'm not going to characterize, you know, where the committee would be.
Howard.
Thanks, Howard Schneider with Reuters. I wondered if you could please elaborate, explain a little bit the 2 changes in the language of the statement here. In the first paragraph, when you say inflation has made progress, dropping the word further progress. And in the second paragraph, dropping the sentence that the committee had gained greater confidence that inflation was progressing towards its 2% goal. Is there any policy substance behind either of those changes in language? Is it meant to open the door to a December pause? Is it meant to communicate anything about the stickiness of core inflation in the last 3 months?
Not really, no. So let me tell you what we were thinking. So the test of gaining further confidence was our test for the first rate cut, right? And so we met that test in September, and therefore we take that test out. If you leave it in, then it's new forward guidance. It's brand new forward guidance. What do you mean by it? Are you requiring yet further? We have to say yes or no at every meeting whether we've made further progress. The point is we have gained confidence that we're on a sustainable path down to 2%. So that I would tell you is what that's really all about. It's not meant to send a signal. Neither of those is meant to send a further signal. And saying further progress, it becomes a test. We don't want to be. We don't think it's a good time to be doing a lot of forward guidance. There's a fair amount of uncertainty in what I've said.
Thank God.
The path that we're on, we do know where the destination is, but we don't know the right pace, and we don't know exactly where the destination is. So the point is to find the right pace and the right destination as we go. And I think there's a fair amount of uncertainty about that. And you don't want to tie yourself up with guidance. You want to be able to make sensible decisions as you go.
Oh my God. Thank you, Powell.
Steve Leisman, CNBC. Mr. Chairman, you talked about higher rates, perhaps from an expectation of higher growth. You didn't talk about it in terms of expectations of higher deficits. Is that something you think might be behind the recent rise in interest rates? And are rising deficits a concern?
He just can't comment on it. It's not his job.
We don't comment on fiscal policy. And again, I don't have a lot more to say on what's driving bond yields. In terms of policy changes, though, let me give you a sense of how this works in the ordinary case. Let's say Congress is considering a rewrite of the tax laws. Doesn't matter what's in the content. So we would follow that. At a certain point, we'd think we see the outlines, so we'd start to model it. And then we'd wait, and then at a certain point, the staff would brief the FOMC and say, these are the likely effects. There's lots and lots of literature on the effects of tax policy changes on various parts of the economy. So we try to get smart on that, and then the law actually passes. And you'd start to you'd probably run an alternative simulation before that happens, just to keep people trying to understand it. Then when it actually passes, it goes into the model along with a million other things. So we have a very large economy. Many things are affecting it at any given time. And, a law change of some kind would go in there, but it would, it's a process that takes some time. Clearly, the legislative process takes a lot of time. And of course, the real question is not the effect of that law. It's all of the policy changes that are happening. What's the net effect? And, the overall effect on the economy at any given time. So I think that's a process that takes a lot of time and that we go through all the time with every administration constantly. And this will be no different. But right now there's nothing to model right now. It's such an early stage. We don't know what the policies are, and once we know what they are, we won't have a sense of when they'll be implemented or all those sorts of things. So I think I would just say we're not doing that now, and all that will take time, and it will be very much regular order when we do that.
If I could just follow up on Nick's question. Are the current rates something you feel like you need to lean against, in that they go against the direction of policy by adding restriction to the economy, or do you just take them as a given and perhaps a signal that you should do less?
I just think the first question is, how long will they be sustained? If you remember the 5% 10-year, people were drawing massively important conclusions, only to find 3 weeks later the 10-year was 50 basis points lower. So it's material changes in financial conditions that last, that are persistent, that really matter, and we don't know that about these. What we've seen so far, we're watching it, we're reading, we're doing the decompositions and reading others, but right now it's not a major factor in how we're thinking about things.
Chris.
Thank you, Chris Rugaber at Associated Press. You mentioned the positive economic data that we've seen since the September meeting, including the revisions to things like savings, higher GDP growth. We saw stock market jump yesterday. That's renewed some of the questions about why do many cuts at all in this with this backdrop.
So you're right. As I mentioned, and as you mentioned, the latest economic data have been strong, and that's of course a great thing and highly welcome. But of course, our mandate is maximum employment and price stability, and we think that even with today's policy is still restrictive. We understand it's not possible to say precisely how restrictive, but we feel that it is still restrictive. And if you look at our goal variables, the labor market has cooled a great deal from its overheated state of 2 years ago and is now essentially in balance. It is continuing to cool, albeit at a modest rate. And we don't need further cooling, we don't think, to achieve our inflation mandate. So that's the labor market. Inflation has moved down a great deal from its highs of 2 years ago. And we judged, as I mentioned, that it's on a sustainable path back to 2%. So the job's not done on inflation. But if you look at those two things, we judged in September that it was appropriate to begin to recalibrate our policy stance to reflect this progress. And today's decision is really another step in that process. Overall, as I mentioned, we believe that with an appropriate recalibration of our policy stance, we can maintain strength in the labor market, even as our policy stance enables further progress toward our inflation goal.
Great. And just to follow up, what might cause you to pause rate cuts in December? What kind of economic data would lead you to that path? Thank you.
So we haven't, made any decision like that at all. But we're in the process, as I mentioned, of moving policy down, our stance down over time to more neutral level. And as a general matter, as we move ahead, we are prepared to adjust our assessments of the appropriate pace and destination as the outlook evolves. So, for example, if we were to see the labor market deteriorating, we'd be prepared to move more quickly. Alternatively, as we approach levels that are plausibly neutral or close to neutral, it may turn out to be appropriate to slow the pace at which we're dialing back restriction. Again, haven't made any decisions about that, but that's certainly a possibility. If you can think of it as similar to what we do with asset purchase, with asset runoff, with QT. So we reach a point where we slow the pace, much like an airplane reaching the airport slows down. And so we're thinking about it that way, but it's something that we're just beginning to think about.
Edward.
Thanks, Chair Powell. So with the noise in the jobs reports that we've seen, and you look at the Fed's favorite inflation, PCE inflation, overall it's 2.1%, very close to the Fed's target, but core inflation is 2.7%, and it's been that way since July. So why doesn't this data give fuel to a rate pause for this meeting?
Well, so I think if you look at the 3 and 6 month, you're quoting the 12-month. So we look at all of them, right? But if you look at 3 and 6 month core PCE, you'll see they're around 2.3%. So we look at all of them, and we look at 12 as well. But what it's telling us is that we really have made significant progress, and we expect there to be bumps. For example, the last 3 months of last year, the core PCE readings were very, very low, probably unsustainably low. So that's why forecasts generally see a couple of upticks toward the end of the year. On the other hand, the January reading certainly looks like an example of residual seasonality, so that we saw last year. So when that falls out of the 12-month calculation in February, we should see a thing down. So it'll literally be a bump up and then down. We understand that. Overall, you see the progress on inflation, and you also look at the economy and you say, what is the inflation story now? Where's it coming from? So I point to a couple of things. One is the non-housing services and goods, which together make up 80% of the core PCE index, are back to the levels they were at the last time we had sustained 2% inflation, which happens to be in the early 2000s for a period of 5, 6, 7 years. So they're back to that level. What's not is housing services. So let's talk about housing services. Housing services is higher. What's going on there is, market rents, newly signed leases are experiencing very low inflation. And what's happening is older, leases that are turning over are taking several years to catch up to where market leases are, market rent leases are. So that's just a catch-up problem. It's not really reflecting current inflationary pressures. It's reflecting past inflationary pressures. So that's one thing. The other thing is, I'd say look at the labor market, not a source of inflationary pressures. Where's it coming from? It's not a very tight economy. What is the story about inflation? You see that catch-up inflation also in insurance and several other areas. So you're seeing. We're not declaring victory, obviously, but we feel like the story is very consistent with inflation continuing to come down on a bumpy path over the next couple of years and settling around 2%. That story is intact, and it won't be one or two really good data months or bad data months aren't going to really change the pattern at this point now that we're this far into the process.
So you're quickly trying to get to that neutral rate that you see, or do you foresee that you have some time to get there?
Nothing in the economic data suggests that the committee has any need to be in a hurry to get there. We are seeing strong economic activity. We are seeing ongoing strength in the labor market. We're watching that carefully, but we do see maintaining strength there. And so we think that the right way to find neutral, if you will, is carefully, patiently. Again, that's not meant to have a specific meaning, other than to the extent the economy remains strong, we have the ability to take advantage of that as we try to navigate that middle path between the two risks.
Craig.
Hi, Chair Powell. Craig Torres from Bloomberg. Two questions today. Did you learn anything about what Americans think about the economy from the election results? First question. Second question. I want to talk about some labor market indicators, and I do so with great respect for your attentiveness to the maximum employment side of the mandate, Chair Powell. So the unemployment rate has been at 4% or higher for 6 months. One of the broadest measures of unemployment is up about 0.5 point from a year ago. Compensation gains are sliding back. The quits rate, a signal of labor market dynamism, has been heading down to that bad neighborhood of the 20 teens. So you have put a marker at Jackson Hole saying any further cooling is unwelcome. It is cooling generally a little bit further. So at what point do we reach what you would describe as a shortfall from maximum employment? Thank you.
Sure. So on your first question, I'm not going to talk about anything that relates directly or indirectly to the election. On the second one, this is the great question, and so one we think about all the time. So I'll just say a couple things.
Screw you.
There's nothing really surprising here. What we know is that the unemployment rate is low. We also know that it's moved up significantly from a year or so ago. So we've seen a big change upward in unemployment. Sometimes that has meant bad things. So far, it doesn't appear to be. It appears that I wouldn't say that the labor market has fully stabilized, because I do think it's continuing to very gradually cool, but it seems to be in a good place. And our policy, of course, is designed to keep it in that good place, to maintain the strength in the labor market, while also enabling further progress on inflation. You mentioned a bunch of indicators, and you're right. The openings to unemployment rate is back to a normal level. I would characterize it more broadly as normalizing. You mentioned wages. Wages are still running just a bit above where they would need to be consistent with 2% inflation, unless productivity is going to remain at this high level. If we see productivity, more sustainably at these high levels, then that would sustain higher wage gains. So I would say, in fact, you can say it the other way, that wage increases are now consistent with 2% inflation given current productivity readings. But of course, the lore on productivity readings is whenever you see high readings, you should assume they're going to revert pretty quickly to the longer term trend. That has always been the case for 50 years. But it may be that we're now 5 years. If you look at the NIPA revisions that came out a month ago, we're 5 years into a nice set of productivity readings, which are sustained and very healthy. But overall, it's a good labor market. We can talk about 20 different data series. We'll be looking at all of them, of course. We don't want the labor market to soften much from here. We don't think we need that to happen to get inflation back to 2%.
Victoria.
Hi, Victoria Guido with Politico. Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on, do you think that legally you're not required to leave?
No.
Mike.
Yeah. Michael McKee from Bloomberg Radio and Television. You talk a lot about what the data are telling you and how you are dependent on the data. But in terms of forward-looking assessments of the economy, what are you hearing from CEOs or other officials around the country? What did you hear today from the regional bank presidents about what companies and consumers think about where the economy is going from here rather than looking backwards? And does that match up with what your forecasts have been and what you think the appropriate policy path should be?
So it's hard to characterize a really interesting set of discussions we had, and of course you'll see them in the minutes in 3 weeks. But I would say this: I think the comments from our Reserve Bank colleagues and from the CEOs that they talk to are pretty constructive on the economy right now. Pretty constructive, feeling that the labor market is back to normal, to the point where it's no longer that much of a discussion topic in their worlds, whereas 2 years ago it was all they were talking about. So they feel like the labor market's in balance. People feel good about where the economy is. Demand is obviously pretty strong, and you're seeing 2.8% growth in the third quarter estimated. Maybe the year is 2.5%. This is a strong economy. It's actually remarkable how well the U.S. economy has been performing with strong growth, a strong labor market, inflation coming down. We're really performing better than any of our global peers, and I think that is reflected in what you hear from what I hear people hear from CEOs. I don't get to talk to a lot of CEOs in my job, but I hear what others summarize from those, and of course I hear the Reserve Bank presidents do a lot of that, and it's pretty constructive overall. Now, that's not to say there are areas of caution and things like that, but ultimately, overall, pretty positive.
To follow up the areas of caution, if there were black clouds on the horizon that you identified as something you're watching, what would they be?
I think it's things like clearly
10-year low of debt.
Geopolitical risks around the world are elevated, and just as clearly they've had relatively little effect on the U.S. economy. Now, that can change through the price of oil or otherwise, but people talk about those as something that's on the horizon all the time. But ultimately, if you look at the U.S. economy, its performance has been very good, and that's what we hear from business people, and expectation that will continue. If anything, people feel next year. I've heard this from several people that next year could even be stronger than this year.
Andrew.
Hi, it's Andrew Ackerman with the Washington Post. I just wanted to follow up on the discussion earlier on fiscal policy. Your predecessors, Greenspan and Volcker, spoke up loudly when they thought large budget deficits endangered economic or financial stability. Will you do that too? And right now we're in a period of full employment. We have large budget deficits and debt at historic highs that are rising. Is that something you'd speak out against?
So, I have said many times, no more, no less than what the predecessors you mentioned have said. And what that is that the U.S. federal government's fiscal policy is on an unsustainable path. The level of our debt relative to the economy is not unsustainable. The path is unsustainable. And we see that you've got a very large deficit you're at full employment, and that's expected to continue. So it's important that we, that to be dealt with. It is ultimately a threat to the economy. Now, I can say that I don't have oversight. We don't have oversight over fiscal policy. I've said it on many occasions, just said it again.
Okay, thank you. I guess the other question is to follow up on Victoria's question. Do you believe the president has the power to fire or demote you, and has the Fed determined the legality of a president demoting at will any of the other governors with leadership positions?
Not permitted under the law.
Not what?
Not permitted under the law.
Thank you.
That's illegal.
Courtney Brown from Axios. In response to Howard's question, you said it wasn't an ideal time to give forward guidance because of the economic uncertainties. Can you lay out what some of those uncertainties are and whether or not it includes some of the proposals that the president-elect has put out on the campaign trail, tariffs, for instance?
No, I was not referring to the new administration's policies at all, nor will I today. So
Sounds like
what I'm just saying is, as we look ahead, we know, as I mentioned this in my statement, that the risks are two-sided. I guess I should start by saying that we think that the economy and we think our policy are both in a very good place, And but as you look forward, you say, what are the risks? And one risk is that we would move too quickly and find ourselves having moved too quickly, and inflation comes back, and we lost our chance to get inflation back to 2%. So we have to avoid that risk, and to avoid that risk, that means you want to move carefully. The other risk is that we move too slowly, and that we allow the labor market to weaken too much and do unnecessary damage to the labor market and to people's working lives. That says don't get behind the curve. So these two things are the two risks that we have to manage, and so we're in the middle there. We try to be in the middle and deal with manage both of those. Again, the idea is to support the strength we have in the labor market and in the economy, but also with somewhat less restrictive but still restrictive policy, enable further progress toward our 2% inflation goal. This is a thing we're meeting by meeting. We're going to be making our assessment of what the right path is. It's not as important. The precise timing of these things is not as important as the overall arc of them. And the arc of them is to move from where we are now to a sense of a more neutral policy. We don't know exactly where that is. We only know it by its works. We're pretty sure it's below where we are now. But as we move further, there will be more uncertainty about where that is. And we're going to move carefully as this goes on so that we can increase the chances that we will get it right.
Simon.
Thank you, Chair Powell. Simon Rabinovich with The Economist. I know you don't want to share your decomposition of bond yields, but if you look at the break-evens, it is clear that longer-term inflation expectations do seem to have risen up at about 2.5%, for example, on the 5-year. That's up half a point from when you cut in September. Do you have any concern at all that longer-term inflation expectations are de-anchoring, or put another way, are anchoring at a slightly higher level? Thanks.
So we would be concerned if we thought we saw longer-term inflation expectations anchoring at a higher level. That's not what we're seeing. We're still seeing, between surveys and market readings, broadly consistent with. I looked at the 5-year earlier today, and it's probably moved, but it's just not. It's kind of right where it's been, and also it's pretty close to consistent with 2% PCE inflation. So that's one that's been a traditional one that we look at a lot. But overall, expectations seem to be and really have throughout this in a place that's consistent with 2% inflation. But you're right to say we watch that very carefully, and we will not allow inflation expectations to drift upward. But that's really why we reacted so sharply back in 2022 was to avoid that.
Kelly.
Hi, Chair Powell, Kelly O'Grady, CBS News. We just talked about what you've heard from business leaders on the economy, but many average Americans are still not feeling the strength of the economy in their wallets. So what's your message to them on when they might expect relief?
Well, they're not.
So
they're screwed.
You're right that we say the economy is performing well, and it is, but we also know that people are still feeling the effects of high prices, for example, and the world went through a global inflation shock, and inflation went up everywhere, and it stays with you because the price level doesn't come back down. So what that takes is it takes some years of real wage gains for people to feel better, and that's what we're trying to create. And I think we're well on the road to creating that. Inflation has come way down. The economy is still strong here. Wages are moving up, but at a sustainable level. So it's just, I think what needs to happen is happening, and for the most part has happened, but it'll be some time before people, regain their confidence and feel that. And, we don't tell people how to feel about the economy. We completely respect what they're feeling. Those feelings are true. They're accurate. We don't question them. We respect them.
And just a quick follow-up, President-elect Trump has been critical of your performance. Any concern about his influence on the Fed's independence?
I'm not gonna get into any of the political things here today, but thank you.
Hi, Chair Powell, Nancy Marshall-Genzer with Marketplace. What is your plan if we start to see stagflation?
So that's the whole plan is not to have stagflation, so we don't have to deal with it. So that is actually our plan. It's of course a very difficult thing because anything you do with interest rates will hurt one side or the other, either the inflation mandate or the employment mandate. I would just say that we've been able to see inflation come down a whole lot, much closer to our goal, without the kind of sharp increase in unemployment that has often accompanied programs of disinflation. So, knock on wood, we've gotten this far without seeing a real weakening in the labor market, and we believe we can complete the inflation task while also keeping the labor market strong, and that, of course, is exactly what we're trying to do.
Can you rule out an interest rate hike next year?
No, I wouldn't rule anything out or in that far away, but that's certainly not our plan. I mean, our baseline expectation is that we'll continue to move gradually down towards neutral, that the economy will continue to grow at a healthy clip, and that the labor market will remain strong. If you look at our that will not change from the September SEP. That is our baseline forecast, and short of some exogenous event, that will continue to be our forecast for the foreseeable future. So, but ultimately, we're not in a world where we can afford to rule things out a full year in advance. There's just too much uncertainty in what we do.
Go to Jean for the last question.
Hi, Chair Powell. Jean Young with MNI Market News. I wanted to go back to a comment that you had made about Americans being quite unhappy about the cumulative price level rise the past few years, even though now inflation is back on a path to 2%. Would it be appropriate for the Fed to undershoot for a while on its inflation goal under the average inflation targeting regime, so people have a chance to catch up?
No, that's not the way our framework works. We're aiming for inflation at 2%. We did not think it would be appropriate to deliberately undershoot. And part of the problem there is that low inflation can be a problem too, in a way. But that's not part of our framework, and it's not something we're going to be looking at in our framework review. Thank you very much.
All righty, ladies and gentlemen, that was a very, interesting FOMC, but nothing really happened. It was just it sounded like he was just getting interrogated the whole time with the political questions. For those of you guys that don't know, Powell and Donald Trump don't like each other. They do not get along. If you remember back in 2019 when Powell started messing around with interest rates, Donald Trump was not happy about it. He was kind of trying to get Powell removed, and they were clashing back and forth. They're not fans of each other. But we did see a statement today that came out that Trump was going to let Powell serve out the rest of his term. And it was funny seeing those comments where Powell's like, well, if you're asked to leave, you're going to go? And he's like, no. And they're like, well, what about this? He's like, not permitted under the law. Yeah, interesting, because there was nothing. This is a dud. I mean, you might see this move up in the market here and be like, oh my God, the market ripped on FOMC. No, this is a complete dud of a meeting. All of that was priced in. We're really looking to see where we go into the end of the year and then really see what we do from there. So, team, I'm going to have that post-earnings video out for you guys tonight. Make sure you guys have notifications turned on for the channel. You're not going to want to miss that one. I mean, it is the easiest strategy in the world to trade. You guys will see why once you guys see the video. But we'll be live tomorrow morning publicly at 9 a.m. Friday's our public live day. For those of you guys that, again, really want to take your trading to the next level, get access to both the courses, all of the private live streams, all the macro research reports, single stock research reports, pre-market plans, watches of stocks and cryptos about to explode before they do. I'll throw the link one last time in here for you guys to join Less Trades, More Profits with us. I mean, even if you just want to check it out, The 50% off discount code for your first month is bullish. You guys will see on that page there, all 5-star reviews. You can look at what people are saying about it. Yeah, I mean, again, you guys want to come and make sure that you guys have the tools to have long-term success in the market. Make sure you guys hop in there, because this is the last month for that 50% off your first month sale. And then very soon after that, prices are going to be going up, and we're going to be going waitlist only. So don't miss it. Again, we're going to have that video out for you guys later tonight. And what else? Live stream tomorrow morning. So yeah, nothing really in that FOMC. There was nothing really there. So everybody, I will see you guys later. Really, I mean, fun day, fun week so far. We got to see if we can get some more post earnings tomorrow. We do have a couple more earnings tonight that could be very interesting. David says VIX really is the best. Oh, thank you, buddy. I appreciate that. Yeah, I mean, you guys know where to go if you guys want the tools for long-term success and actually start having success trading and stop losing. So team,